I have small capital. Which lot size should I use? I have this amount of capital. Which lot size should I use? If you are that kind of a person who is asking for that question, then this is your video. Watch it to the end. But before we get there, let me show you this. I am going to show you a few things right here. So I just give my people this signal right now. I gave them the signal, and then I gave them this in the morning, and then yesterday I gave them this other signal, and always successful, and that is good. Now before I show you how to get that, should we start with the question I asked, or we first analyze the market? Let's analyze the market, because if I don't analyze the market, you guys will be happy to know about how much you should use per lot size, but you will not know how to analyze the market. So like you see today's movement, was it really worth it? How true is that? So before you enter the market, especially for the real traders, we need to be informed. We need to be updated earlier before we enter the market. We need to know the next movement of the market. In fact, you can cover the next movement of the market. Actually, you can talk about next week, the next 2 weeks, where will the market be, and how do you do that? If you ask that question, then definitely it is the time frame to let us know when the market, where the market will go next. Did you know that? No? Yes, let me know in the comment section. Now which lot size tells you when the market will be and when. When talk about 15, actually from 15 below, or I can also say 1 hour and below, those are scalpers. That is actually a day. You want to enter the market today and come out today, or in the next 24 hours use at least 1 hour, in the next maybe 3 hours use 15 minutes. So for weeks you need to use 1 day and above, but I actually prefer 1 day. So how do we do that? So let's change the time frame to 1 day, so we know where the market is actually going next. So what we are going to do is to actually tap anywhere in the screen, and then select actually 1 day, which is right there. Actually, if you look at 1 day, you realize that uh, this moving average 50, the exponential moving average 50, is above the exponential moving average 20. So for swing traders, they are actually selling, and for those that are entering the market, they are actually also following this they're also following this support zone. So they are actually waiting for the market to either cross below this support zone, and then they further sell. If they confirm this, they're waiting for either this candlestick to form another one, and if it forms the next candlestick and it closes above the current candlestick, then that means they are going to buy. But should they buy or sell? Let's draw this down, and then we see. You realize that the market was going down, and it is actually from down here. If I try to scroll down, I am looking for the resistance, a strong resistance from the past time frames. You realize that the market was going up, so that means for us who are buying, have a bigger advantage. Okay, for us who are buying, we actually have a bigger advantage. So if you look at this, you realize that this was a support zone, and if you look at it, it is actually down right there. So it is possible that these guys can sell and they can still make money. Those are what. But where will the market go? Based on this, there is what we call the this was the higher high right here. As you can see, that was a higher high, and it actually goes further if I'm to drag this up right here. So these are the higher highs, and for that case, the market is possibly going to go up like you can see it moving already. Okay, so as you can also see right here, as we started the video, this was we were in profit, but currently we are in losses. But also based on this time frame, we have the higher highs, so there are higher chances of the market going up. You get that? And then also, when we talk about this resistance that I just drew a few minutes, there is also that it can get back down, but it will be very difficult for us to cross right here. If it closes, if by any chance this candlestick closes below this support zone, then it will be a super sell. But for a moment, it is actually super bullish. Following this very resistance zone, let me just add it right here. Following this resistance zone, I think I should either use this triangle. Following this resistance zone against this support zone, which is right here, if you can see, there are higher chances that the market can be bullish. Yes, it is not a surprise. It is not a surprise for us to see it go up to $5,000. That is not a surprise. Okay, so have in mind that this may happen, and a short trend can happen in a few days if the market like crosses above this zone, above this zone right here. I don't know which price is that. Let me use indicators, of course. Above this zone right here, if it crosses that, then it will confirm more further buys. So expect the market to go up to 4,300. If it goes beyond that, then it will go bullish for the next 2-3 weeks. You get? Now, you know that, when we are talking about this, it is a little bit confusing, but we are based on the analysis themselves. As you can see, this line that I drew right here, it is at resistance on this end and it is at support. So there's most likely going to be a support right here, a resistance right there, and the market can either go up. If it breaks that line, then it will continue further. How does that help you? It helps you to target. So like for me, if I'm trading now, I will actually favor the buy because of this support zone. I'll favor the buy. If it crosses this support zone going down, it breaks it and it goes down, then I'll definitely consider a sell. Now that is that. I know we're a little bit confused. Let's reduce the time frame to a 4-hour time frame. So a 4-hour time frame is actually asking us to super buy. You see, it is still bullish. Remember the other time it was bullish, bearish, you get. Now here it is super bullish. That means even if you buy right now, you are actually going to make money. And a 4-hour time frame allows you to trade for about either 1 day, 2 days, or even 3 days. 4 hours. 4 hours. So that means if you're using a 4-hour time frame, give it a period of exactly 4 hours, 8 hours, 12 hours. Actually, then you can go for 24 hours. Yes, 24 hours or 48 hours. So that is basically 2 days. So that means a 4-hour time frame trader can actually be a scalper or a swing trader. I know you're a little bit confused. Ignore that. Now that we have seen that the market is bullish, let's come to 1 hour. Let's come to 1 hour. Where is 1 hour? Which is right here. So 1 hour is also telling us that the market is still super bullish. Okay, so that is how we know the market. But then remember, following the previous market, following the 1 day time frame, the market can actually go up to 5,000. Up to what? Up to 5,000. So we can now go back to our 15 minutes time frame. Now here we actually see a bullish trend, but then there is most likely to be a resistance following this. Let me expand this and remove all this other confusion, but that is a trade that is running. I don't think I need to remove that. Okay, so now you know that, like I said, there's most likely to be a resistance somewhere here, and then the market can either continue up or down, so you don't have to hurry to enter the market at that moment. As just like you can see my trade, we came out of the profits already, but then you saw me extending my take profit after even hitting it, because I wanted money. I think that is called greedy. You are not supposed to have that. Okay, so now that we know that the market is still bullish, should we buy? Yes, you can buy. You can buy. But that's not what brought us here. What brought us here is actually to know how to set your trade based on which capital you have. So how do we do that? First of all, you need to, let me first hide all this, then hide. Let me see right here. Okay, I have hidden all that. Now, how do we know how much we have and how much it is actually bullish? It is a buy, and it is running against me. So let me just lose this trade, and I want to lose only $60. Modify. So I know the trade is against me. I can lose $60. That's not much. Okay, I oversat. Now let's know how to set a trade against our capital. So first of all, this is what you need to know. Look at this. Our lot size is 0.1. Let's say our entry is exactly here, as I see where there's that cell is actually a entry for a buy. So this is a buy zone. Okay, it has confirmed that it is a buy zone. Okay, especially if that current candlestick closes above that this previous candlestick, that is a buy, and it is, as you can see, it is actually a buy. Should I place a buy? That will be greedy and lack of discipline. So now, like I said, as you can see this arrow right here, that cell you see is actually supposed to be a buy, because that is a buy zone right now as I talk. So now that we know that we are supposed to buy from there, so our entry is going to be right here, because this is the buy zone. We are going to set a buy trade. My hand is paining. So I'm going to use I actually have to tap right up here to place a trade. Don't tap on buy and sell. That is a wrong procedure. So this is a buy. It is asking us to buy. Actually, this is also a buy zone. Okay, but the perfect buy zone is right up here, if you saw that. So now that we have set our buy zone, we need to set our take profit and a stop loss. But begin with the stop loss. The first stop loss is actually going to be here. So you can see with a lot size of 0.1, if this is our stop loss, actually it's supposed to be above resistance right here, because there are higher chances that the market can drop up to there. So you can see that with a lot size of 0.1, we are most likely to lose 130 if the market goes against us. Okay, so that means if you're using that lot size, you need to have at least $1,000 you can get. So that means this lot size is not going to favor you who has let's say it's not going to favor you who has $100. So If you have $100, which lot size is better? All you're going to do is to just reduce this to maybe 0.5 and then come back here and set your stop loss. Now you can see that our stop loss has reduced to $65. If the market goes against us, we are going to lose just $65. So how much should be your trading account? So that means with this lot size also, you need to be having at least $500. Now things are getting more tougher, right? Now let me reduce this further because I have little money. I have $100. What do? Let me first use, let's try 0.03, and then we see what our stop loss is. $39. That is still too risky. Okay, so if you're trading gold, because this is the smallest lot size, I prefer that you actually have at least $100 if you are trading gold. You get that? I think I've given you the answer that you want. And now let's talk about the take profit. Okay, how do we determine the take profit? I'm going to click right here on take profit. Okay, and then you drag this right here, so you decide how much. What it will be showing you, let me try to reduce this like this. It will be showing you how much your take profit is. As you can see right here, TP 200. If I allow this to go up here, or if I allow it to come up here, I'll be taking like 150 $150. That's what I want right here. That's 160. I want 150. So that's 148. That is fine. And to confirm that, you need to click on this arrow right here. You need to click on this arrow right here, and then here you can remodify. If I want 50, I can just come right here and try reducing this. And then it was 53, I put 54. Yeah, that 54 is actually giving me 151. And also, if you have a specific target of a stop loss, you can come here and edit the price, of course, to your favorite. And then after that, you then click modify. So after that, that means you have confirmed that trade. Okay, you have now set your take profit. But then how much take profit are you supposed to take? Like I told you, come here. Okay, drag this. If you are having $100, at least set this to $10. Okay, depending on the the lot size that you chose. Remember, I showed you how to set the lot size. Okay, so I don't need to go back there. So if you are trading with at least $100, drag this until you see $10. $10 is just 10% of $100, which is okay. But I actually prefer you make at least 5%. So you can drag it to $5. Okay, you can drag it to $5 if you have $100. If you have 1,000, then that is $50. $50 is enough for you, or even 25. I think you're getting me. Don't be ruined by the characters that you see in YouTube. Somebody is having 1,000 and wants to make another 1,000. Remember how much you risk to lose, to get, is actually, remember how much you want to earn is actually equivalent to how much you can lose. I don't know if you're getting the point. Okay, so that is it. So drag here and earn at least 5 to 10% of your capital. But real traders actually target for just 1%. That's why you see me, I jump out of the market as soon as possible. So long as I realize I've made 1%, I don't care about the rest. You go and do your research. You discover that the most successful traders are actually those that target for at least 1% or 2%. Go do your research and come back here and tell us. Have a great day and bye bye. I want this trade to make me just about $60 and I get out of the market. It has already made 60. What? 62? I want it to confirm the take profit. Take profit, hit, take profit, hit the take profit, man. Don't be selfish, market. Hit the take profit. I want the take profit. Hit the take profit. This market, oh wow, great. Made just 70. That's okay.